Is California's home insurance crisis stabilizing? Well, if you look at the latest Fair Plan numbers, it appears many homeowners are still relying on the state's fire insurer of last resort. I want to bring in ABC 10's Becca Habegger, who is joining us now with a deeper look and how more changes are possibly on the way. Right, Becca?
Yeah, Alex, California's insurance commissioner has implemented reforms to get people off the Fair Plan and back into the regular market. We've been reporting on that process for years. But some state lawmakers and the commissioner himself say more work needs to be done.
The California Fair Plan is the state's high-cost, bare-bones insurer of last resort. It's funded with a pool of money from insurance companies, not taxpayers. It's intended for when other insurance companies won't cover your house for fire.
So what is the state doing about this outdated and expensive Fair Plan?
I have been covering this story since 2019, when a growing number of homeowners began getting dropped or non-renewed by their insurance company and had to turn to the Fair Plan. At the time, in September 2019, the Fair Plan had nearly 155,000 homeowner policies. That number has only grown, ballooning in September 2025 to 625,000 policies. That's 4 times the number of policies in 2019.
How do we get back to being the insurer of last resort? And can we get back to being the insurer of last resort? I think that's really the open question.
That's Fair Plan President Victoria Roach late last month speaking to the California Assembly Insurance Committee. She says they now have just over 668,000 policies, about 43,000 more than in September.
I'd prefer to call the Fair Plan California's safety net rather than the insurer of last resort. Because I feel like the Fair Plan is no longer the insurer of last resort.
Lawmakers and lobbyists alike expressed concerns that some homeowners are opting for the Fair Plan in some lower risk areas because it's less expensive than policies offered by insurance companies in the regular so-called admitted market.
Let's be reasonable. This is a debacle. This is wrong. We need to take care of the admitted market.
You cannot depopulate the Fair Plan when somebody can go to the Fair Plan policy, maintain the Fair Plan policy for 30, 40 years because it is cheaper.
Roach agrees.
Our role is not to compete or replace admitted carriers.
Last year, the Fair Plan filed a request with the California Department of Insurance to raise rates an average of 35.8%. That request is still pending. It comes as many fixed income homeowners on the Fair Plan say their rates already feel unaffordable. Until more carriers in the admitted market return to writing more fully in the state, Insurance Committee Chair Assemblymember Calderon says the Fair Plan needs to better serve its customers. That's why she and Insurance Commissioner Ricardo Lara have introduced AB 1680, a bill that, among other things, would require the Fair Plan to offer full homeowners insurance coverage, not just fire coverage. A Fair Plan spokesperson told ABC 10 Monday they are reviewing AB 1680 and have no comment at this time. At the committee hearing, however, Roach said offering full coverage is possible but would be difficult.
So it's not that it can't be done. It's a huge undertaking that will take time and will take money. Back of the napkin math, we're saying 30 to 50% increase in our budget in order to write that policy.
AB 1680 may be heard in committee March 5th.
Fair Plan data show while the number of policies is still growing, the pace of growth slowed slightly last year compared to 2024. The plan's president says she thinks a lot of that is because we're not seeing the bulk non-renewals that were coming out from the admitted market in recent years. We'll continue following these developments.